Hey everyone, it's Cole Braithwaite, your commercial real estate investment sales expert, coming to you again with another video. Just want to update you on the activity in the Q2 2022 GTA commercial real estate market. Just want to share with you some statistics on what we're seeing and the trends that we've been noticing going forward. Also, at the end of this video, just want to share with you, at the time of this recording, the Bank of Canada just increased their overnight lending rate by 1% to 2.5%. And want to share with you just some of the thoughts and trends that I'm tracking and how this can potentially affect the market and property values going forward. So again, with this stats that I've put together here, it's available to you as a download in the email, or I can email you directly the information if you'd like. So that way you can take your time and go through it and see some of the interesting other transactions or notable transactions that have occurred in the past 3 months. So what we found is that the retail market specifically over the last quarter, and this is buildings 2,000 square feet or higher, saw a dip in the amount of sales by about 50%, or exactly 50%. What dip we noticed is that there was 149 transactions this time last year. There's only 100 this year. What that means and what we're trending or what we're noticing is that there's a lack of availability of quality product that's coming on. What we're finding is that owners that own quality commercial retail assets are holding on to those longer, and the ones that we find coming to market are the ones that are, I guess, a bit of dogs or need a little bit more work than what's in their core portfolio. So what we found also is that the total sales volume, the total dollar volume, is actually down 21%. We saw $491 million worth of transactions occur within the quarter. And figuratively, about last year, we saw about 600 million in transaction volume. So we're seeing that that's affecting pricing. So not only is the number of transactions decreasing, but the total number of or the total value of the pricing is decreasing also as well, which is interesting. On the flip side, what we're finding with the industrial market, and this is buildings anywhere from 10,000 to 100,000 that we took a look at, we're seeing that the prices are the number of transactions actually have increased about 16%. So that we found that last year in Q2, we had a record quarter of 79 transactions. We've now superseded that with 94 transactions, which is quite impressive. The industrial market still continues to trend on, and investor demand as well as user sentiment has been extremely strong, and that continues to push. A big theme with all of this is also the lack of supply availability of product, and that's what's leading into the dollar volume reaching numbers of $1.1 billion in transactions in one quarter. That's up 38, call it 40% from year over year from last year, where we only saw $702 million worth of transactions. So this gives you an idea. These are similar trends that we've been tracking. The industrial and the apartment markets have proven to be the most stable long term. They're the most friendly with investors, as well as achieving currently in the market the most favorable financing terms. What we're finding from lenders and talking when talking with lenders, what they're saying. Just the core demand and the core fundamentals behind those two asset classes have been pushing it. Obviously, retail and office have been hit the hardest, and they're working through. I don't think retail is bad as office, but if there's a service component to retail, it's definitely been trending well. So depending on the types of tenant mixes in the properties, you can see differentiation in values and what you're seeing on lending rates. So like I mentioned, wanted to share with you that at the time of this recording, the Bank of Canada just increased their overnight lending rate by 1% to 2.5%. We were anticipating a 75% basis point increase, and we saw a full point, which was shocked the market a little bit. What that means for you is that we're going to start to see potentially cap rates change, and that could affect values. Now, the reason being, we're finding that most recently a client of ours was able to secure some financing on some industrial assets as well as some retail assets in the 5.5% to 6% range for variable commercial mortgages. We're seeing now the fixed rate 5-year debt increasing to over about 6.5%. So we haven't seen this affect values, and you're not going to find this in the statistics as yet, because a lot of the commercial real estate is past looking and a lot of the data hasn't occurred yet. So really over the next 2-3 quarters is where we're tracking, or what I'm specifically looking at, and seeing how this trend plays out in terms of values. Now, the reason why cap rates are going to have to adjust is that they're going to have to adjust the returns to actually carry the properties, Or two things we can find: vendors, in terms of keeping their values, are going to see their rental rates increase or their net income increase to sustain the increase in costs, or buyers are just going to be forced to increase their down payment requirements so that their debt service coverage ratio is able to cover the debt and the higher cost of debt. Now, anecdotally, from myself and deals and transactions I'm working on, as well as others that I'm dealing with in our office, we are seeing financing starting to affect some of the deals. Buyers that aren't as well capitalized, we're seeing them back out. Appraisals are changing depending on the asset classes a lot lower, which is requiring the buyers to come up with higher down payments to now cover that cost. So lenders, this is a fluid moving action, and we're seeing this happening currently right now. So what I will do in future videos is keep you up to date with what I'm seeing, how you can prepare and adjust yourself for things coming forward, and how you can take advantage of some of the opportunities that may be available coming in the market coming soon. So if you have any questions, you can always reach out to me, and anything specific with your properties, I'll be glad to share with you ways that you can improve it, and give you ideas of what values are, and where I see things trending going forward. If any other questions, I look forward to talking with you guys, and until next time, take care.